So let's talk about unit trusts this week. Are unit trusts a good way to diversify your portfolio right now?
Yes. When you're looking on your unit trust, it is a collective investment whereby multiple investors can pool together their resources in a portfolio of assets to whether it is stocks, bonds, real estate, and you're getting a diversified portfolio by virtue of you investing in unit trusts. And one of the things that I always tell persons, and it's an acronym I use when I'm talking to persons about unit trusts, is what I call you want to reap the rewards of unit trusts, which is one, the first thing, you want to reduce volatility. Reduce volatility in your portfolio by virtue of diversification. And E, you're looking on expert portfolio management. What does that mean? You have your investment manager now, they are mandated in terms of optimizing your returns. So instead of you having to, be researching, getting that information as it relates to the different stocks or bonds, you have investment managers that have the skill set to optimize your portfolio returns. And then what we're looking on is A, accessibility and affordability. Now, when you think about sometimes in terms of stocks, real estate, persons may not have the amount of funds to say, you know what, let me go and buy this property. And you can get, by virtue of investing in unit trust, you can get exposure to real estate returns. So that accessibility and affordability is key. And P, which is portfolio fit. Based on your risk appetite, based on your financial goals, you need to see and have that conversation with a financial advisor to see how it best fits into your portfolio. Because ultimately what you want to do is ensure that you have a diversified portfolio, whether it is getting direct exposure to stocks, real estate, but also by virtue of investing in unit trusts. So whether or not the stock market, in terms of performance, it may be going up or down, you are getting that level of optimization of your returns by investing in unit trusts like income and growth fund that JMMB has.
All right. So talk to me about affordability, because you mentioned that that's one of the benefits, affordability and accessibility. So how
Definitely.
easy is it to invest in a unit trust? Like at what income level does it start at?
So 200 units. So when you're looking on one like your income and growth fund, the price point is $5,000 at this point in time. When you're
Jamaican
looking on
dollars.
like your optimum fund, that is $25,000 in terms of entry or opening up the account. And outside of and that is the affordability and accessibility. So you may not be able to pick up that big money, so to speak, and say, yes, I'm going to buy real estate. But by virtue of you investing in our optimum capital fund, you are getting those real estate returns. By virtue of you saying, let me start with this $5,000 in the income and growth fund, you're getting the stock market returns. And that is what you want to do in terms of leveling up and optimizing your portfolio by virtue of you saying, you know what, I may not get direct exposure to these particular forms of assets, but let me see how I can get it by virtue of investing in a unit trust.
So you mentioned two types of unit trusts that JMMB manages. You said you have a real estate fund, and what was the
Right.
other
We
one?
have over 8. So right. So we have 8. We have Giltage, we have real value fund, we have bond funds, we have USD funds. So we have around 8 funds, but I would have highlighted our income and growth fund and our optimum fund, which is a lot of persons gravitate towards those two particular type of funds.
Those are the two most popular.
Yes, popular. Yes.
Okay. I have a couple of questions on the chat. So where is it? Orlando wanted to know, how good is the real estate unit trust and does it pay dividends?
All right, so it is, so every single day you have the unit price, and it has, in terms of our 12-month growth rate, it has been outperforming inflation, and that is what you want to look on in terms of overall performance. So any benefits it accrues, so you get the tax benefit by virtue of tax-free earnings, any dividends, everything is invested, and every single day, and you can see in terms of your overall portfolio performance, even when you go on JMMB Moneyline, you can see in terms terms of how it is that this particular investment is performing day to day, because the unit price actually changes from day to day.
So walk us through how it works when you invest in a unit trust. Is it the same thing like when you invest in stocks directly, that you benefit from price appreciation, you also get dividends? How does it work? What's the benefit?
Right, so you get the same thing. So you're getting indirect exposure. So by virtue of you purchasing, so you get direct exposure when you say, you know what, I'm going to buy this particular stock, whether it is a JMMB stock or any other stock on Grace Kennedy, I'm getting direct exposure to this particular asset. Now, for the unit trust, or like when you have our income and growth fund, you're getting this same benefit. It's just that now it is across a wider cross section of equities that we may have in the portfolio that is selected by our investment managers. So you're getting that appreciation, you're getting whatever dividends that may be paid. So you're getting that fulsome benefit. And that is why it is critical to put that a part of the portfolio so you can reap the rewards.
And do you report to your investors on what the unit trust is investing in and how it's performing?
Yes. So when you are onboarded, the first thing you get is an offering circular, which has all of the information in terms of how it is invested, the governance structure. So that is one of a critical document that you get in terms of the onboarding process. As it relates to even investment performance, that is something that is published in the Gleaner, and also on our website, you'd have that information. And as I said before, you also get that information by virtue of you having access to our Moneyline platform.
Are unit trusts more for the conservative investor, the one who doesn't really want to take too much risk and just wants you to do all the work for them?
So you have to, I wouldn't say for the conservative, it is for the investor who is looking to ensure that they can smooth out the volatility across their portfolio and optimize by virtue of diversification. So it wouldn't be conservative, because even when you look on the income and growth fund, that is for somebody who has possibly an above average risk appetite. So they would want to invest in the income and growth fund. And then you're looking in terms of like the optimum fund, that is, an average risk appetite. Again, what you want to do is have a best fit in terms of your portfolio. And it is important not just to pigeonhole yourself to say conservative and yes, unit trust, no. When you sit down with a financial advisor, they're going to walk you through in terms of what your goals are, and a series of questions would identify, if this person, aggressive, moderate, conservative, and you get a best fit solutions now as to how it is that we can build out a robust portfolio that ultimately will ensure that you achieve your financial goals.
Question coming from Learn, Grow, Invest. Are any unit trusts buying into infrastructure companies like TJH?
So we have different investment structures. Specifically, the bias is towards commercial real estate at this point in time for Optimum Fund, and while we have a bit amount of residential, it is towards the commercial real estate and different real estate structures and deals. So not presently, but we do have a bias towards commercial property.
Sean seems very interested, but he wants to know, can you lose with a unit trust, or is it always a guaranteed to make money?
No guarantee. You cannot have, what you want to do is ensure that you get the information. And by virtue of you sitting down with a financial advisor or having that conversation, you're going to say, what has been the historical return? And how has it been outperforming inflation? And you are going to, again, and one of the benefit of that is that with any particular asset, when you have a direct exposure to it, you immediately feel that impact. By virtue of you investing in the a unit trust fund, what you're doing is that you're diversifying, or you're investing in a diversified pool of assets that may have a high concentration in terms of real estate. So that in and of itself helps to mitigate and preserve whatever it is that you may have invested. But again, there is volatility, because that is the nature of investments, but it's how it is that it is managed by the investment manager. And again, asking those probing questions when you sit down with your financial advisor or call your financial advisor in terms of whether or not it is a best fit for you.
And similar question coming from Oren. How risky is it to invest in unit trust versus stocks, which offers a better rate of return on investments?
So when you're looking on, so you can, as I said before, you're getting direct exposure. So if there is an immediate, if there's an appreciation with a particular or a specific stock, you're going to get that direct benefit. And with the unit trust, however, you may get the direct benefit by virtue of the fact that it is in the portfolio of stocks that the investment manager has invested in. So you're going to get that particular benefit, but the riskier asset would be in terms of direct exposure to stocks. So again, and coming back to the root of it, and in terms of why it is that you'd want to invest in unit trust, is because you want to diversify your portfolio. You want to smooth out that volatility for your portfolio eventually. And that is one of the key benefits of investing in unit trust.
Final question comes from Sean, who's queuing up the perfect pitch for you, Camille. Sean wants to know, how do you buy into a unit trust? Do I need to walk in? Is it on Moneyline? Who do I talk to?
Excellent question. You can actually go digital onboarding with JMMB. So at this point in time, you can just click on a link and you can just open up one, whether it is an optimum capital account or an income and growth account. So in the comfort of your home right now, you could actually just go on and just open up an account. Or if you want to come in and see us, you can, come in physically and have that conversation with us, and we would open up the account also.
All right. Thank you so much, Camille. Much appreciated.
Thank you.